RSI. Hello, in this video we will consider a popular relative strength indicator oscillator. RSI was developed by Wilder in summer 1978. Since then, this technical analysis instrument is extremely popular among traders on various markets including Forex. Let us see what RSI Oscillator is like. InstaTrader platform supports plenty of indicators and oscillators, including RSI Oscillator. Applying the oscillator to the chosen instrument's graph is easy. To do so, open the list of indicators in the navigation panel menu. Choose RSI and either drag it to the graph or click it twice with the left mouse button. In both cases, a dialog window with indicator parameters will appear. Those can be corrected, left unchanged or reset to default settings. The main parameter for RSI line plotting is period, that is to say the number of time periods, candlesticks or bars on the graph take into account when calculating the oscillator's value. Wilder, developer of this oscillator, recommended using 14 as period value. 9 and 12 are popular values as well. RSI looks like a line with values varying from 0 up to 100. What does RSI measure and what is this line for? RSI is for relative strength index oscillator since it measures trend strength. In particular, it compares growth rate of the price with its decline rate for the chosen period of time. To put it in simpler words, RSI shows if it was upward or downward price movement that prevailed during the chosen period. Therefore, advancing RSI indicates dominance of positive market mood and vice versa. Since RSI value range is from 0 up to 100, 50 is a conventional line of balance between uptrend and downtrend. Let us draw it in the indicators chart. To do so, right-click on the free field of the price chart. Choose List of Indicators and double left-click on RSI to activate the Oscillator Settings dialog window. Switch to the Levels tab, click the Add button and add the required level, 50 in this case. It is clear now that after the RSI line overcomes the level 50, the price often moves to the direction indicated by the oscillator. Brief breakouts of this level give a good opportunity to open a position along the trend or add up to the existing one. RSI oscillator can give signals about probable change of the current market trend or the price coming out of the flat zone that is characterized by a weak trend or its absence. Relying on RSI value, we can conclude if the price is in the overbought or in the oversold zone. In order to determine these zones, standard levels 80 and 20 are used. After the oscillator entered the overbought zone, there is a chance the uptrend will slow down and correction or even trend reverse will take place. In this case, RSI leaving the overbought zone by breaking down the 80 level will be a signal to open short sell positions. And vice versa, oversold zone entry and exit may serve as a signal to open long buy positions. Another important trading signal is divergence. It is a situation when prices in the graph show a new peak or throw, and the oscillator line that usually coincides with the price chart to a large extent does not prove their existence. Divergence is quite a relevant factor when making trading decisions in the first place. RSI's divergence is considered to be a very important and reliable signal. Let us have a look at the examples. We can see the price chart forming two definite ascending peaks, but the RSI chart shows an inverse situation. The peaks on it are descending. In this situation, it is wise to open short positions with stop order set above the last peak on the price chart. The next situation is worth attention, as it is a kind of divergence as well. The price chart forms two ascending peaks as in the previous example, and in the RSI chart we see two equally high peaks. It is important to realize that not the value of the divergence, but its presence is what matters. Therefore, in this case, two peaks of equal height on the RSI chart display divergence to the price chart. It is clear that this divergence is fully proved by the further actions. RSI chart can form various graphic models. They may stay unrevealed in the price chart but serve as good trading benchmarks. In case the graphic figure in the price chart is as clear as in the RSI chart, it should be taken into account that the formation of figures in the oscillator graph is often completed earlier than in the price chart. Let us consider several examples. Double top is clearly seen both in the price chart and in the RSI chart. In the meantime, the bottom line in the RSI graph was broken earlier than in the price chart. Small but noticeable double top and double bottom. Double bottom in the RSI chart with a breakthrough of the bottom and testing of the bottom line after the breakthrough. In this case, just as with classic technical analysis figures in price graphs, we had an opportunity to open a position both when the bottom was broken and when the bottom line was tested. Another popular way of using RSI is plotting of support and resistance levels in the oscillator chart. Support and resistance levels as well as trend lines are interpreted in the RSI chart just like in price graphs. It is interesting that in the RSI chart, trend line or support level are often broken earlier than in the price chart. In the end, we will consider such way of using RSI oscillator as signal filtration. It is often used in various trading systems to prevent buying when RSI is above the overbought level and selling when RSI is below the oversold level. This is all we wanted to tell you about a popular RSI oscillator. We hope that this information will make your trading more successful. InstaForex Company wishes you all the luck. Goodbye.